Hello and welcome. Today we're diving into something really powerful, a feature of the enterprise investment scheme that a lot of people miss out on, the ability to carry back your income tax relief.
Now, just before we get into the nitty-gritty, this whole discussion has been put together by the experts at Pro Tax Accountant. They live and breathe this stuff, helping investors and business owners with clever strategies just like this one. So yeah, we're in very good hands.
Okay, let's start with a really big question. What if you could make an investment right now that literally reaches back in time and shrinks the tax bill you owed for last year? I know, it sounds a bit like science fiction, doesn't it? But trust me, with the right strategy, it is absolutely possible.
So, here's what we're going to cover. We'll kick off with a real-world example, get to grips with the EIS scheme itself, then we'll unlock the carryback power. After that, we'll check who's eligible, how you actually make the claim, and finally, what your next step should be. Let's get to it.
Right, let's make this real. To really understand how powerful this is, let me introduce you to Oliver. He's an entrepreneur based in London, and like a lot of self-employed people, he's just had a bit of a shock looking at the tax bill from last year.
So, what happened? Well, the 2024/25 tax year was a fantastic year for his business. He landed a massive project, which was great, but it came with a huge one-off bonus. And that bonus pushed his income and his tax bill way, way higher than he was expecting. So now he's scrambling, looking for a smart way to deal with it.
And this is where our solution comes into play. It's called the Enterprise Investment Scheme, or EIS for short. And for someone like Oliver, it's the perfect tool to tackle that surprisingly large tax bill from the past.
So what exactly is it? Well, put simply, the EIS is a UK government scheme that encourages people like you and me to invest in smaller up-and-coming companies. You know, the innovative ones that are a bit higher risk but are crucial for growing the economy. And to say thank you for taking that risk, the government gives investors some very generous tax breaks.
And the main benefit? It's a big one. You can claim income tax relief at a rate of 30% on whatever you invest. Just let that sink in for a moment. That's not a deduction, it's a direct 30% credit that reduces your final income tax bill. It's an incredibly powerful incentive.
But this is where it gets really, really clever. This is what we call the carry-back power. It's the secret sauce that lets you use an investment you make today to go back and fix a tax problem from yesterday.
The way it works is actually pretty straightforward. The carryback rule lets you make an investment in the current tax year, that's 2025-26, but treat it as if you made it in the previous tax year. For Oliver, that was 2024-25. This means that 30% tax relief can be used against last year's much higher tax bill.
Let's walk through Oliver's plan step by step. First, here in the 2025-26 tax year, he finds a qualifying company and invests £50,000. Simple enough. Then, when he's doing his taxes, he makes the choice to carry back the relief. And just like that, the relief is applied to his 2024-25 tax bill, the one from his big bonus year.
And the result? It's incredible. By carrying back that £50,000 investment, Oliver instantly slashes his tax bill from last year by a massive £15,000. That's 30% of his investment, coming straight off the tax he owed HMRC. What a difference.
And here's a quick pro tip for you. This strategy is an absolute game changer if your income goes up and down, which is so common for freelancers, consultants, or business owners. If you have one amazing year, followed by a quieter one, the carryback lets you use an investment from the slow year to bring down the tax from your peak year. It's a fantastic way to smooth things out.
Of course, with great tax relief comes great responsibility. Or, rules. So let's take a look at the eligibility, because both you as the investor and the company you invest in have to tick certain boxes.
So, for you, the investor, the main things are you've got to be a UK taxpayer, and this is a big one, you can't be connected to the company. We'll unpack what that means in just a second. As for the company, it generally needs to be a smaller, unlisted UK business with less than $15 million in assets, fewer than 250 employees, and be in a qualifying trade.
Okay, let's zoom in on that connected person rule. This is absolutely critical. So stay with me here because this is the #1 area where people can slip up and accidentally lose out on their tax relief entirely. So, what does connected actually mean? Well, it could mean you own more than 30% of the company's shares, or you're an employee. And look at the consequences. It's huge. Being connected knocks out the two biggest reliefs, that 30% income tax relief and the capital gains tax exemption. As you can see, if you're unconnected, you get the whole shebang. The takeaway here is simple.
To get the most powerful benefits, you have to remain unconnected.
All right, so you've found a great company, you've made your investment, and you know you're eligible. Now for the most important bit, how to actually make the claim and get that tax relief.
The whole process happens through your self-assessment tax return. First, the company you invested in will send you a special form called an EIS-3 certificate. Think of it as your golden ticket. You then use the info on that form to fill out your tax return, and here is the most vital part. You have to tick the box or fill in the section that clearly says you are carrying the relief back to the previous tax year. Don't miss that step.
And here's a fun little did you know for you. You actually have a pretty generous window to make your claim, up to 5 years in fact. But there's a really good reason to act fast. The sooner you file that claim, the sooner HMRC could send you a tax refund if you've already paid that bill. It's your money. Why let them hang on to it?
Okay, we've covered a lot of ground, so let's wrap this all up and talk about your next steps. How to turn this knowledge into a real plan. I think the best way to think about it is this. The carryback feature turns what is already a good investment into a truly brilliant tax planning strategy. It's not just some small perk. It's a way to get an immediate and very real cash flow benefit by cutting a tax bill that you thought was already set in stone.
So the last question is really for you. Having seen how it works, are you ready to think about your own financial situation and figure out if this is a strategy that could make your tax bill smaller?
If the answer is yes, or even if you're just a little bit curious, the best next step is always to get professional advice tailored to you. The team at ProTax Accountant are absolute experts in all things EIS and can help you figure out the best plan. You can reach them directly on WhatsApp or give them a call on 07985 689912. Or, if you prefer, just drop an email to info@protaxaccountant.co.uk.
And for more really practical tax tips just like this one, make sure you hit subscribe on the ProTax Accountant YouTube channel. Thanks so much for joining me today.